Hello there, investors. It's Joe here from Start Investing. Today I'm going to show you how to use the ukinvesting.com stock screener as an accompaniment to our ebook, the Start Investing Guide to Stock Screening. So here's the website, and this is the screener. It's not perfect, but it is free and it is very useful. So it's the one that we still use. And so you can see here the number of results that we start before we start screening. So 2,796, and that's pretty much all of the stocks on the UK stock market. So it's important if you are using a screener to make sure that it does have most, if not all, of the stocks, so that you're not screening out results that you're not wanting to from the get-go. We're just going to change the all exchanges just to the London Exchange to make sure that we're only going to get those UK stocks. And then we're going to start entering our criteria. So you add them from the left-hand box and they appear in the right-hand box. And then the stocks appear at the bottom here. So we're going to try and get that number down a little bit and get some nice undervalued dividend-paying stocks that we love so much into this bottom box. So I'm going to start off with the market capitalization, and we like a market cap of above 500 million, so we're cutting out all of those small cap stocks. There's two ways to do it. You can either type the number in here, which isn't working for this one for some reason, or you can use this slider mechanism just in case one of them isn't working. And yeah, we're just going to go just above the 500 million mark because it won't let me do exact numbers. As I said, not perfect, but is free. And then we're going to go secondarily to our P to E ratio. We like a P to E ratio to be below 30. So we're going to type in 30. 30 is still quite high, but for the time being, we want all of the stocks, and we can sort of have a look at the rest of the information later once we've got a big list. So we've done our P to E ratio. There's a few other ratios that we want to add in that we really like. So price to book is another one that we like. Benjamin Graham's favorite. He liked one less than 1. We're going to go for less than 4 because there aren't so many on the market with one that's less than 1 at the moment. The next one we're going to go for is the price to sales. And price to sales, again, we're going to stick to less than 4. The next one we're going to go for is the price to cash, which is this one, price to cash flow. TTM is trailing 12 months and MRQ is most recent quarter, so it's just telling you about which data it's using, so either the last quarterly results or the whole of the last 12 months. Last 12 months is probably a better measure when available, but you don't get so many options with ukinvesting.com. So yeah, sorry, price to cash flow, we're going to go for less than 50 to start with, and then we're going to go and have a look at some of our dividend metrics. So we definitely want to have a look at payout ratio. The most important thing with this really is just to put one of them in to make sure that you are taking into account that the company does pay a dividend. So really any of these will do that job for you. We struggle with that. Well, I'll talk to you about that in a minute. But yeah, payout ratio, we're going to go for less than 60. This one's as a percent, so less than 60%. And then the last thing we want to talk about is debt. So we want to have a look at the long-term debt to equity. We're going to add in there, and that's again a percentage. So we're going to make that less than 100%. So what we're going to be left with here is 42 companies. The thing I was going to say is we struggle with the dividend yield, so that's the percentage that the company's using its earnings with to pay a dividend back. So usually it's between sort of 0. Oh, sorry, that's the payout ratio. The dividend yield is the percentage of the share price that it pays back as a dividend. So usually it's between 0 and sort of 10%. But as soon as we click this one, all of our companies just go. So even from 0.06 to 25, our companies have just gone from our screener. So that one's I just don't think is working properly. So we're going to use payout ratio instead from 0 to 60, and that's the one. That's the percentage of the company's earnings that it's paying back in a dividend. But anyway, yeah. So we've got a nice number here, 42. So that's probably a little bit too many to analyze all of those going into their annual reports and doing a little bit more analysis. So we tend to just tighten up the screws a little bit. So 30 is quite high for a PTE. So if we just reduce that to 25. Reduce our price to book maybe just down to 3, and our price to cash 50 is quite high as well. So if we maybe take that down to 30, so we're starting to get about 25 companies, and we can even reduce the debt levels a little bit. So if we take that down maybe just to 80%, then yeah, we're aiming for about 20 companies at a time. And looking down this list, I can see a few companies that we've bought into in the last few months. Start Investing UK offers a stock picking service, so we have our own real money portfolio where we choose a new stock every month, and we will give our subscribers access to those stock picks. So if you go into startinvestinguk.com/subscribe, then you will be able to sign up and see those stock picks as well. So from here, yeah, you've got your companies, and you can do a little bit more research into those. But this video is just about really showing you how to use the screener. So that's the stock screener. Download our ebook, Start Investing Guide to Screening for Stocks, and you can get that from our website, and I'll put a link below. Thank you very much. I've been Joe from Start Investing, and we'll catch you in the next video.